In terms of geographical contribution, you have North America that continues to have a bulk of the share at 48.2%. And that growth is coming at 1.4%. Latin America has seen a degrowth of as much as 6.9%, but both UK and continental Europe have seen growth of 2.4% and 1% respectively. What I want to hear from Anshul Jethi, who's joining us right now, research analyst, IT services and at fintech and technology, is what he thinks about the constant currency growth. Anshul, thanks so much for taking the time. That first flush of numbers coming through and a constant currency growth of 1.2% sequentially. Is this a tad bit below what the street was expecting?
Hello, hi. First of all, thanks for having me here. So, in my opinion, I think in terms of constant currency, if you are talking about that, I think it's pretty much in street's expectations. We were expecting around about 1.2 to 1.5% sequential growth from TCS. I think they have delivered that. It was on the back of inorganic growth as well from the past acquisitions they have done last 2 quarters as well, I think, yeah. So it has been in expectations of the street only.
TCV at $12 billion is another talking point, and I think that was anticipated to come in, Anshul, at $10 billion. And in INR terms, you're seeing a significant beat in the revenue, right? Because I think it was penciled in at, 2.3%? It's coming at 5.4%. So do those two numbers lead you to believe that TCS broadly has performed better than expected?
I think in terms of stating the deal, they have done a bit more than what was expected around the corner. Last quarter, the management themselves were expecting around about $9 to $10 billion of deals for Q4. So ending the FY26 with a total order book of around about $38 to $39 billion. They have outdone themselves. Will need better clarity from the management as well. Is this, led by some new AI deal wins as well? Their progress on AI segmental analyzed revenues as well on that part. So I think it's better than expectations as of now. I think broader focus will be on the FY27 commentary as well. With $12 billion, they are, year-to-date order book reaching almost $41-42 billion. I think that gives a little bit comfort for FY27 performance, near-term performance as well. So, yeah, more focus will be on FY27 guidance given by the management.
Well, hi, Mr. Anshul, just me joining. Right. Well, hi, Mr. Anshul, just me joining in here. Well, I would like to focus on the overall AI aspect of the company, the AI revenue part. It's been 3 quarters since the company is reporting the revenue, and we see an uptick of 18 to 19% in every quarter. Last quarter, we saw at $1.8 billion, and this quarter, we see an AI revenue of $2.3 billion on an annualized basis. So how do you see the trajectory going ahead from here? And the new age services do contribute 33% of the overall revenue, but the AI is something that's picking up really fast for the management.
Anshul, what was the view?
What's the and sockets coming from all around the globe, right? With AI, not even on a monthly basis, but on a weekly basis, improving itself, improving the product and output. I think we are still lagging behind. 2.3 billion on an annualized basis is still, pretty minuscule in comparison to the size of TCS as a whole. So, yeah, much will be, focus on management's commentary on the deal wins which they have performed better than expectations. What led to such outgrowth in deal wins? I think those kinds of questions management will be facing today.
That view. Talking about the overall Middle East segment, though it has a very little contribution, but it's one of the growing engines for the TCS. So,
yeah, I think for now it has a contribution of, 2 to 2.5%. It's pretty minuscule. It may have a lagging effect in the near term as well, but I don't think so. On an overall basis, it will continue to be a growth engine for TCS going ahead. Or in the uncertainty going around on the West Asia front, I think it's pretty bad. Coming from the next 6 months to 1 year, I think it will start pumping the growth numbers for TCS once again.
Anshul, a couple of points. So first, on the margins, at 25.3% basis our calculations, this is more or less what consensus estimates had pegged it as well. In your book or by your calculations, how much of a tailwind has been experienced by TCS by way of currency depreciation? And are you satisfied with the number that you see with regard to EBIT margins?
Yeah, margins are expected to be. I think the cost, the company had broadly guided that they will be, pretty stringent after my
Okay, we seem to be having a little bit of an issue with Anshul's feed. We were talking, of course, to him about the margin trajectory. But if you're joining in for the first time right now and you're trying to get a sense of what the numbers look like, let me take you through what we know so far. You have a revenue uptick of as much as 5+%, to be specific, 5.4% on a sequential basis, 70,698 crore rupees on an INR basis, and in constant currency terms, it's coming at 1.2% growth. The EBIT margins have come in at 25.3%, and this is in line with expectations. Even that constant currency growth has come in at 1.2%, which perhaps would have been at the lower end of what the street would have been anticipating. 1.2 to 1.5% is that range of the expectation for constant currency growth. Some benefit has also been seen likely on the currency depreciation. In fact, that is what I was asking Anshul about. Anshul, how much of a benefit do you see TCS having received on account of that currency depreciation? Are you satisfied with a 25.3% EBIT number?
I think are pretty much in lines with our expectations. There has been some restructuring productivity benefit that TCS has got from this quarter as well, because we have seen a reduction in headcount in this quarter going with the trend from the past quarters as well. So there's some restructuring benefit which has benefited the market. That overall INR has depreciated almost 2.5% if I'm not wrong this quarter. So some or the other way, I think margins have been appreciated due to INR depreciation, give or take 50 to 60 bits. But mostly, I think the restructuring activity has contributed towards margin being stable.
Anshul, I want to look at the splicing of the verticals as well as geographies, and two things stand out. One is that BFSI as a segment has not done particularly well, in that it's just about 0.1% growth on a sequential basis, and as the largest contributor, therefore, it's not the biggest contributor to that growth that we're seeing. So is that something that worries you for what the outlook for FY27 will hold? And two, on North America, with growth of 1.4% sequentially, and as the largest market, is that something that you were penciling in?
Yeah, so Q3 was more of a seasonal quarter, wherein growth was impacted because of leaves, furloughs, etc. So BFSI was expected to do better in Q4, but I don't think, as you stated, that the number 0.1%, I think it's pretty minuscule to the whole growth part of TCS. So BFSI has not delivered. It will be, interesting to know management comments on it, getting to know how the budget, new year has started, FY27, and new budget rollouts. I think for surely management has prepared for them as well. So spending from BFSI, has it been decreasing, or is it going diverted towards more on AI segment? It will be interesting to know from management.
When there is commentary from the management, Anshul, let me ask you about this, right? Based on the flush of numbers that you're seeing, you're obviously looking forward and you're looking at FY27. You said, in fact, more than the numbers that you're seeing right now, the outlook for FY27 is going to be something that you're more focused on. And so therefore, let me ask you this. What are the key numbers in terms of guidance that you would be looking forward to, and what would you be pleased by? What would you be disappointed by?
I think margins are going to be stable going ahead as well. Pretty much, I think 25 to 26% is the range I think the management will also guide. Much more on the execution part, I think if management, because I don't think so there has been a severe change in the discretionary spending from the American continent or the Latin American continent as well. So that would be more disappointing if management also agrees to it, that the discretionary spending is not yet improving. So that would be difficult to navigate for FY27 growth.
Just one last point, and this relates to the headcount. Anshul, what we're reading is that there's an uptick on a sequential basis of 2,000. In the larger scheme of things, when you look at the fact that there's been a restructuring of the workforce that they have undertaken over the course of the last 1 year, how do you read this?
I think it's pretty positive. The trend should continue with all other IT companies as well. So as to say that all the AI jitters that we have been hearing around for the past couple of months, we can put them to the rest.
Okay.
So I think more on the, I don't think so that the company right now will focus more on the number of employees or number of headcount or spend there. I think they will be more focused on upskilling their employees and getting them the best kind of trainings from for developing AI programs or in order to improve their productivity. I think that will be the core focus for the company going ahead.
Okay. Anshul, on that note, thanks so much for taking the time. Pleasure speaking with you. In fact, I'm joined by